Hello guys, welcome to my new tutorial once again. Welcome to all my new listeners, viewers and subscribers. So especially thanks to all of you guys. Please don't forget to subscribe the channel and also push on the bell icon button for getting the more informative videos. Okay, I'm going to start discussion about one another new topic which is not related to the cryptocurrency. Okay guys, so let's start. You need to know what is forex. Basically, the bottom line, forex is a portmanteau of the foreign currencies and exchange. Foreign exchange is the process of changing one of the currency into another currency for the variety of reasons, usually for the commerce, trading and tourism. According to 2019, the editorial report from the Bank of International Settlements, the global bank for the International Central Bank, the daily trading volume for forex reached is $6.6 trillion in April 2019. Let's start discussion about some important key takeaways about forex. The foreign exchange is also known as the forex. The market is the global market capitalization for the exchanging of the national currencies. Because of the worldwide trade, commerce and the finance, forex market tend to be the largest and the most liquid assets market in the world. Basically, the currencies trade against each other and exchange the rate pairs. For example, Euro USD as a currency pair for the trading euro against the US dollar. Forex market exists as the spot market as the world derivatives markets are funding and forward futures options and the currency swaps. Now you need to know what is the forex market. The foreign exchange market is where the currencies are traded. Currencies are the important because enable purchase of the goods, services locally and according to the borders. International currencies need to be exchanged in order to conduct foreign trade and the business. If you're living in the US and you want to buy the cheese from France, either you have the company that you are buying the cheese from has the pay to the French for the cheese in euros. This means that the US imported would be have the exchange of the equivalent value of the US dollar into euros. The one unique aspect of the international market is that there is no central marketplace for forex. Rather than the exchange trading conducted electronically over the counter, which is also mentioned as OTC, which means all that transactions occur with the computer network between the traders around the world rather than one centralized exchange. The market is open 24 hours a day, 5.5 days in a week, and exchanges are traded worldwide. The major financial centers of London, New York, Tokyo, Frankfurt, Hong Kong, Singapore, Paris, Sydney, across almost every time zone. Exchange market is considered more opaque as compared to the other financial markets. Currencies are traded in OTC market where the disclosure are not mandatory. Large liquidity pools of the institutions firm as the prevent features of the market. One would presume that the country's economy parameters should be the most important creation to determine its price. But that's not the case. The 2019 survey found that the motives large financial institutes played the most important role in determining the currency's price. Now, you need to know how to trade forex. Trade forex has the different ways. First one is spot markets. Forex trade is the spot market has always been the largest because it trades the biggest underlying the realist assets for the forwards and the futures market. Previously, the volume in the futures and the forwards market surpassed those the spot markets. So you need to know how does the spot market work. Basically, the spot market is where the currencies are bought and sold based on their prices. The price is determined by supply and demand and the calculating based on the several factors including current interest rates, economic performance, sentiments towards ongoing political situations as well as the perceptions of the future performance one of the currency against an other. And the final deal is known as spot deal and is a beneficially transactions by which one party delivers an agreed upon currency amount to counter the party and receives the specified amount for an other currency at the agreed upon exchange rate value. Now, let's talk about the pros and cons of trading forex. Now, first of all, I am telling you the pros. Forex markets are the largest in terms of the daily trading volume in the world and therefore offer the most liquidity. This makes it easy and to enter and exit the position in any of the major currencies. Even the fraction of the first, the second for the small spread in most market conditions. Now you need to know what are the cons. Banks, brokers, dealers and the forex market allows the high amount of leverage, which means that the trades can the control large positions evenly the relatively little money for their own. Leverage is the range of 101 as not upcoming in forex. The trade must understand the usage of leverage at the risk that leverage introduced in the account. Extreme accounts of the leverage have led to be many dealers become insolvent unexpectedly. Second pro of forex is the forex market is traded 24 hours a day and 5 days a week, starting each day in Australia and ending in New York. The major centers are Sunday, Hong Kong, Singapore, Tokyo, Frankfurt, Paris, London, and New York. And the second con about forex is trading currencies productively requires the understanding of economic fundamentals and the indicators. I can see trends to be need to be have the big picture underlining the big economy of the various countries and the interdependence of the gaps and the fundamental of the drive currency values. For the beginner traders, it is a good idea to set up a micro forex trading account with the low capital requirements. Such accounts have the variable trading limits and allow the brokers to limit their trades at the amount as low 101,000 euro and the units of the currency. For context, standard account lot of equal to the 1 lakh currency units. Forex terminology. The best way to get started on the forex journey is learn its language. Here is a couple of terms you need to know. Forex account and the micro forex accounts and the leverage. These are the important terms you need to know. Okay guys, I hope this is enough for you. If you have any question related to the forex, must ask in the comment. Don't forget to subscribe the channel and thank you so much.